Are buy-to-let properties a bad investment in 2024? This is part 2 of our property series. Today we're going to compare the performance of property over the last 17 years, so an average of property across the United Kingdom, and compare that with the performance of a global equity fund, so stocks and shares over the same 17-year period. And we're going to use an ISA, so a stocks and shares ISA, and a pension for tax efficiency. The example is based on a basic rate taxpayer purchasing a buy-to-let property on a capital repayment mortgage to provide them with income and a resaleable asset for retirement. Past data isn't predictive of future performance, so I recommend speaking to a financial advisor before you make any form of investment, whether that be buy-to-let property, ISA or pension. Here we have a 17-year property return based on growth data for average price of property in the United Kingdom between June 2007 and June 2024. So the average price in June 2007 of a property in the UK was 186,348, and then June 2024, 17 years later, it was 287,924. Which is an annual return of 2.56204%. So the same as before, so this time I've used 17-year property return from June 07 to June 2024 for a basic rate taxpayer, and we're going to project how that would look in the future. So we've used the average property price in June 24, which was 287,924, same costs, but this time it's growing at 2.56% rather than the 30-year return, which was at 5.65%. Maintenance at 1% of the property value per annum, which is 56,918. Tax relief at 11,383. And then the total property value based on that growth rate in 17 years would be 444,868. So we take the value, minus the maintenance including the tax relief, capital gains tax to pay, 24-25 tax year, and the initial fees as they don't count as profit. So net gain would be 353,144. Rental again, so average rental in June 2024 is used, 1310. 3.71% is the average growth rate of rental increases since 1989 up until 2022. Total rental income, management fee at 10% is typical, in occupancy at 5%, and then income tax at 20% on that amount, which is 74,820. Total net gain on that is 250,649. Mortgage again, we've used exactly the same. So 90% mortgage, so 10% deposit, 259,131 mortgage, 17-year term this time though, rather than 29-year. Same average mortgage rate of 5.62%, which is the average mortgage rate we saw from 95 to 2022. Now the mortgage rate is higher because obviously the term is less, so 1975 per month. Total mortgage cost is lower as well because there's been less time for the interest to be paid, so 402,898 plus the original deposit of 28,792. Mortgage interest rate relief, so I did explain this briefly before. So you only receive interest rate relief, you don't receive relief on the capital. So, and that's capped at 20%. So if you're a 40 or 45% taxpayer, you can only claim back tax relief on the interest, not on the capital, and only at 20% regardless of your tax status. So net cost there of the mortgage is 402,937. So we take the net gains here and the net cost. The total gain over a 17-year period would be £200,856. So here's 17-year pension returns based on the same period, so June 07 to June 2024. I've used a global equity fund, so same as I did in the 29-year comparison of property versus pension and ISA. So it's the Royal London Worldwide Fund. I don't have any affiliation to Royal London, and I'm not recommending this individual fund. But when I was looking for a global fund that had 29 years plus of data, this was the first one I came across. So only reason I've used it. So we start off with a deposit of 40,975. So that's the same as if you were to have put a deposit on the mortgage, paid stamp duty, legal and survey fees. And then 1975 per month, which is the same as what it would have been if they were paying monthly payments into the mortgage. You have basic rate pension contribution relief, so basic rate tax relief. 5218 goes in as initial payment. 2468 goes in as a monthly payment, obviously because of the basic rate tax relief. And then the total invested, excluding tax relief, was 443,875. And 17 years' time, the total value would have been £1,540,316. You can then take 25% tax-free, so 385,079, and that leaves you with £1,155,237, which is taxable. So if we said that's going to provide an income for a 30-year period from age 60 to 90, and we assume no additional growth, so let's say that it's all in cash and no interest is applicable, it would provide a post-tax income of £31,234 per annum, based on 24-25 taxation, or a total post-tax income, so this would include the tax-free amount of £1,322,399. Here we can see the chart, so you can see a 17-year return using the Royal London Worldwide Fund, so it's a global fund. Return of 17.52% per annum, so that's average. So you'll see initial investment of 51,218, 2,468 regular investment, so it's the amount obviously that's been put in, and both of those figures with tax relief. Total savings, so total amount invested including tax relief is 554,843, and then you can see the trajectory all the way up here, with the final value being £1,540,316 after 17 years. An alternative would be a 17-year stocks and shares ISA return. So same data, so from June 07 to June 2024, using Royal London's Worldwide Fund. So instead of being able to put 49.75 into the ISA, we're limited to £20,000 per annum, so that's what we've put in. And instead of being able to put in 1975, 1666 per month is all you can put into an ISA, so slightly more than that. It's actually 1666.66, which makes £20,000. So 1,666 goes in per month, along with the £20,000 initial. Total invested is 359,864. That's growing at 17.52% per annum. So total value in 17 years is 981,500. Benefits of this is that's zero tax, so no tax on that regardless of the growth. So that could be £10 million and you still wouldn't pay a penny of tax. Access to it anytime, so you don't need to give notice. There's not a specific age as with a pension. Unfortunately, there is only a £20,000 per annum investment limit. With a pension, you can put in £60,000 at present, and you can also carry forward unused allowances for 3 previous tax years. You can put into a children's pension, but you can also put into a children's ISA. So a junior ISA is £9,000 max contribution per year. Here's a chart for the 17-year stocks and shares ISA return based on Royal London's Worldwide Fund. As we said, between June 07 and June 2024. So, as I said before, initial investment of £20,000, regular investment of £1,666, total investment is 359,864, and then growth all the way up over a 17-year period means in the very end it was worth £981,500. The goal of these videos was to bring a little transparency onto the buy-to-let market. There are a number of variables which could be changing, and we don't always know what the rental yield will be. So hopefully this shows you what the potential yield could be on a buy-to-let property, and also a comparison of what you may get if you were to use a pension or an ISA. Thank you for watching. If you have any questions, feel free to drop me a message on LinkedIn or send me an email. Thank you very much.